Hi everyone. We'll just give everyone a few minutes to turn up, and then we'll kick off. Hi to folks who are joining. We're just going to give it another couple of minutes, and then we'll start. Can you hear me? My internet just died. Am I back?
Yeah, we've got you.
This is a really, really, really great start. We have to do that again. Sorry, everyone. So I'm Hannah, one of the founders of VentureESg, who most of you will know. We're excited to be doing this event with Capsule Insurance, who are a new insurance provider for VC-backed startups and scale-ups. They are the first UK broker to recognize the link between ESG and risk profile in SMEs. And when we were talking to them a few months ago, we realized that, the conversation with VCs and startups is all around what are the financial and commercial incentives for integrating ESG. And to date, that conversation hasn't been overly fruitful because there isn't much data or many kind of things to point to on this front. So when we met Tom and team, we were excited about what they're building and their traction to date. And we wanted to host this session to kind of demonstrate that and have Tom and team and the insurance companies and startups they're working with speak to the theme. So we're here today with Tom, Liam and Dorian. Tom is co-founder and CEO, Liam is co-founder and COO, and Dorian is Chief Sustainability Officer at Capsule. Then we have Arthur Edson, who is the finance director at Wild, a refillable cosmetics startup that has been backed by Jam Jar and Slingshot, amongst others. And then last but not least, we have James Wright, who is head of technology at Beazley, a global specialty insurer that has been going for 3 decades. And James's focus is on SME clients and digital technology to automate underwriting. How this session is going to run, I'm going to hand over to Tom, who's going to kind of give a brief intro to Capsule and what they do. Then we're going to open it up for some panel discussion, and then we would love to get everyone involved and get some questions from the audience. So if you have any questions at any time during the presentation, then just pop them in the chat box.
Perfect. Thank you, Hannah. Hi, everybody. As Hannah said, my name's Tom Wynne. I'm one of the co-founders at Capsule. Liam, Dorian, and I spent the last 10 years of our career scaling an insurance business called Kingsbridge, which was private equity backed by Living Bridge and then Dunedin Equity Partners. And towards the latter end of the period that we were running that business, ESG was suddenly kind of emerging on the radar of private equity houses and VCs, and clearly the LPs often kind of driving some of the messaging there and kind of the requirements. And we were more and more being challenged around ESG metrics, and the topic was kind of brought to the forefront of our mind. We ultimately exited that business, and Liam and I, as we were looking at what we were doing next, settled on focusing on hyper growth venture-backed technology startups in the main, or businesses that at least touch technology. And where we got really, really interested was this idea of the link between ESG and business risk. And I guess it came from a place of thinking that there must feasibly be a link between a well-governed business that treats its customers well and treats its staff well, and kind of more broadly is kind of acting ethically, responsibly, sustainably and such, and that business ultimately being a better run business. And I guess where we got really excited was this idea that there's 6 million UK SMEs, but there's 50,000 scale-up businesses, I guess, kind of to use that term, businesses growing at 20% year on year over a 3-year period in either headcount or turnover. And a good portion of those businesses are venture-backed. And so I think what we found really interesting was the awareness of ESG amongst UK SME populations very, very low. It certainly was 2 years ago when we were kind of theorizing all of this. But the awareness of it in high growth venture-backed startups that in all likelihood kind of might have a younger demographic, a founder might have been launched over the last 5 to 7 years. And then inevitably, if they are successful in attracting venture capital investment, will in all likelihood have been measured in some way around ESG by investors along the way. And so our sense was that this population is one that was primed to really go and engage with about ESG, to measure on ESG, because ultimately our sense was that ESG metrics were at least kind of knowingly or unknowingly baked into the business, just given the kind of the characteristics. And so we started to do some research between around this and the links, which I'll touch on in a second, and engaging insurers. So we just thought we would kind of walk you through that today around the work that we've done with insurers, the link between ESG and the insurance market as we found it, and how that's developed even over the last couple of years. And I guess what really surprised us is the fact that in the insurance market, ultimately, ESG wasn't being assessed, especially at SME level. And so just to kind of step back there, the two areas that we were seeing ESG being referenced the most a couple of years ago was in that VC space, as lots of you will have experienced. But actually, with insurers at board level, it was becoming a kind of a top 3 issue. And Aviva are a great example. Big insurers sit on piles of cash. Aviva kind of manage about £35 billion worth of capital. And actually there at board level, there was a greater kind of focus and awareness as to how is our money, our capital being invested. There was pressure from shareholders around that. But what hadn't really happened, whilst the focus in the investment side of things was there, is it hadn't really come through to underwriting. The only area we saw that it had come through to this kind of assessment in underwriting was with really large multinational kind of tens of millions of pound premium type risks, and a kind of a track back of insurers in insuring kind of really carbon intensive industries like coal-fired power stations and such. But what hadn't happened is it hadn't really flowed through the insurers at that point. I think James will comment in a bit, but it increasingly has. It is something that is being assessed now. But at the time, and I would say now, most insurers, when they're making an underwriting decision, don't assess ESG in any great way. And I think, even to be fair to the insurers, often they're not presented with ESG metrics in any way that they could kind of actually, by brokers, traditional insurance brokers, that they could actually kind of then make decisions based on. And so Amanda, who is kind of Sunday Times Business Person of the Year 2023, CEO of Aviva, global CEO across investments and underwriting, really kind of came out in 2021 and said we can't do one thing on the investment side of things and not follow that through on the insurance side. And so there has been increasing research over the last 18 months, I would say, linking ESG to business risk. But again, it's much more at a kind of big, large corporate level, which doesn't really positively impact those on the call, your portcos, or UK scale-ups and SMEs. And so in order to tackle that, we went to Aviva, who are known to be a kind of a very kind of ethical, responsible insurer. They're the UK's largest insurer. Amanda was very focused on the topic at the time and has continued to be so. And we were going through our own B Corp application process at the time. We've since become a B Corp, and we thought that that was it was a helpful place to start in terms of looking at a population of businesses that have gone through a journey of having ESG metrics assessed, where there are scores around different elements of ES and G. There's data around when they became a B Corp, what their score is, how they score in different ways. And so we were able to extrapolate lots of that publicly available information and do a piece of research with Aviva that looked at UK SME, Aviva's SME book, and then the 588 B Corps. And ultimately what that proved out is that UK B Corps versus UK SME claim less, their claims are less severe, they grow faster, and they fail less than their SME peers. And so that was really, really helpful for us in terms of proving out, because there is a slight kind of we'll have to wait a number of years before the data really proves this. And again, I think that's something that James at Beasley will be able to talk to. But I think now more than ever, there is a real willingness from insurers to say, yes, this strikes us as making sense, that kind of there is that different behaviors and different ways of operating should link through to material risk reduction for different product types. And I think Liam can talk to that as to kind of what behavior impacts what product type in terms of that reduced risk. But helpfully, after our study, B Corp did a very similar study, and again it proved out faster turnover growth and employee headcount, greater expectation around future growth, greater level of staff retention, higher levels of innovation, and so on and so forth. Number 7, I think, kind of really interesting, especially in this world, successful at securing external, kind of equally successful at securing external finance. So it's not inhibiting the business in any way. And I think you'd say arguably businesses that do demonstrate these characteristics actually would be more attractive to the venture market. But I think we were conscious, and there'll be varying views on the calls around kind of B Corp or no B Corp. But we were conscious that it's not a natural fit for some businesses. Some businesses are too early on in their kind of evolution to consider it. But there were lots of businesses we were coming across that were doing great things, whether it was around environmental factors, whether it was around governance. And we were looking at a way of measuring it that isn't how it was being measured for a Google or a Facebook, that made sense and kind of talked to startup founders and their leadership teams, but also one that weighted slightly towards risk and the link between the questions and the impact that would have on risk, and really then a way of presenting that to insurers in a manageable way that they can review either kind of the overarching score or the score for different categories, and that could then impact A, the lens in which they look at that risk or that startup, but B, also just the kind of looking beyond the financials, the turnover, the kind of the geography, the sector and such, which is a traditional way of looking at a business. And what we were really keen to do is to just show the pathway that a startup is on, to say, yes, they may have grown at 100% during this period, but actually look, versus when we first onboarded them to 1 year on at renewal, these characteristics have changed. And Liam can talk on some case studies we've got there as well. And so that allowed us, all of that combined, allowed us to go to insurers and say, if we are engaging with businesses that are focused on ESG or doing kind of going above and beyond in terms of their efforts in this space, and we can present that to you in the right way, whether it's B Corp, whether it's our ESG index, or in the future, whether it's other ways of measuring ESG, which Hannah and I have spoken around, if we present it in the right way, then will you recognize and reward these factors with improved terms, possibly accessing higher limits that wouldn't otherwise be available, reduced premiums? And so the answer there is that we've kind of got this kind of ever increasing group of insurers that have said, yes, we will, if it's presented to us in this way through the index and such. And so that is a real kind of step on, and it's led to a number of clients of ours that are either B Corps or have gone through the ESG journey, index journey with us, to benefit from improved terms, improved cover limits, or even just more insurers having appetite for their risk than would otherwise had we not presented these type of risks and metrics to them. But that's me done in that respect. Happy to answer any questions at the end, but equally conscious, Hannah, that you will likely have questions for the wider panel.
Yeah, thanks so much, Tom. As I said, if anyone does have any questions like specific to Tom's presentation, then please just pop them in the chat and we can answer them at the end, or perhaps I will ask them over the next 10-15 minutes. So, you know, ESG in the venture space is relatively new. kind of nascent topic, and we do have a lot of conversations around what ESG means, how it differs from impact. How did you and your team and the insurers that you're working with, so James in this instance, how did you actually align on a definition of what ESG means to startups? And was there a certain amount of education that you had to go through in that process, and have you experienced any pushback?
Who's that question to, Hannah? James?
Yeah, James, or you guys,
I'll let James answer it first, and then Liam might chime in.
Yeah, I'll take a start of this. So hi, everyone. So Beazley started this journey several years ago, actually, in terms of trying to, not just have a vanity word of ESG, but try and better define what does it really mean to us as a company, and therefore, what does it mean to our clients and our partners like Capsule. So the fundamentals for us is just thinking about doing the right thing, and that sounds quite simple to sort of say. But obviously, when it comes to commercial negotiation and business, it's quite hard. So we sort of centered it around 4 areas, and the education piece, Hannah, I think is really important topic, because it has to start, I think, with your employees and your staff first, so that they're qualified to have some kind of meaningful communication with clients or brokers. So we broke it into 4 key pillars, and I won't go into all the details, but essentially it was around enhancing livelihoods. So that's our charity and community piece. Responsible business. So that's governance and compliance plus inclusion and diversity. Positive procurement. So making sure our own supply chain is in check, and then thinking about a sustainable world. And that's really where the environmental piece comes in on the underwriting side. So we've been doing a lot of work on that for the large risks, as Thomas was saying. We've started in that large space, and as we're coming down into my division now, which is more SME focused, we're finding that the first thing that we need to do is around education and what does it mean to them. And we've got some things active at the moment in the innovation space on that. And exactly to Thomas's point, we're looking for ways to make it easier on the E side to measure what that means to that SME. A lot of SMEs don't have a sustainability officer, don't have that privilege. It's often the CEO that's buying the insurance and doing all the risk mitigation. So our objective at the moment is to start with them, provide tooling and education, and take it from there. So it's still early days in the SME space, but we're learning an awful lot from our mid-market and large risk team.
So have you done, on that front, a significant amount of research on the mid-market front on that relationship between ESG and risk?
So as Thomas said, it all starts with data. What we started doing as of about 18 months ago, for every single submission that we get for a client, we score them on some ESG metrics using things like Sustainalytics, Rep Risk, S&P. That score is shown to our underwriters for every single submission. And that's starting to help them understand that client's ESG status. There's a second part to this, which is backing that with ESG capital, which I can talk about as well. But you've got to link both selling that policy with an ESG awareness, with backing it with ESG qualified capital. So we've taken that step as well in terms of a dedicated syndicate for that.
Yeah, Bill, maybe we'll come on to that more afterwards. I think probably of particular interest for most of the people in the audience will be to hear from, Arthur, from the perspective of a startup who's kind of adopted this. So, Arthur, how I'd love to hear how you approach this at Wild, ESG more generally, and what role has this played in actually kind of building the company, the culture, and also for your fundraising journey?
Yeah. Hi, Anna. Really good question. I think, I fundamentally for Wild, ESG and specifically environmental and sustainability is at the heart of everything that we are trying to achieve, and it frames our purpose. So our mission statement is to reduce single-use plastic through people's personal care regimes. That goes further, and our North Star metric that everyone is kind of KPI'd on internally is kilograms of plastic prevented. So it really provides a common purpose that everyone is working towards throughout the business, and every decision that we make and every kind of decision that is made in the company is framed with with ESG in mind, specifically kind of sustainability, as I mentioned, that is a key pillar of any decision that we're making. And really, I think how we define success as a kind of as a growth startup is moving away from purely financial metrics and onto ESG metrics as well. And I think for us, proving we can move the dial on sustainability is as key to building a successful business as like financial metrics.
And was working with Capsule kind of an increased pressure and increased incentive on the whole of the kind of management team or team generally to adhere to this and integrate ESG, or was it something that you were already doing as part of B
No,
Corp?
it definitely brought some accountability. I think that's the other angle to ESG that we adhere to at Wild is around accountability and actually acting on ESG to ensure that we're taking decisions that are beneficial for sustainability reasons as well as financial. I think having a provider like Capsule really helped us to take something which traditionally you wouldn't associate with anything to do with ESG, like in insurance, and really mean that we could take a decision that was positive and show our ESG credentials in that field as well. So we really benefited from that as well, and it definitely was part of everything we were doing already, but having providers who hold you accountable to ESG throughout kind of the supply chain is super important as well.
How did it actually affect like the premiums?
I'll let Liam touch on that. He'll have the numbers, I think.
A good segue.
It definitely helped, and we went through the ESG metric or the ESG questionnaire that was shown on screen a little earlier. I think there's a number of questions, some of which are overlap with other like B Corp and other metrics that we already track, and others that are specific to Capsule or the insurance space. And that really helped, I think, in purely financial terms, it reduced our premium quite significantly.
I mean, I think you're right. It's like a holistic benefit, right? It's not just about the bottom line, like the financial bottom line, but I think in this context, it does make a difference because of the rest of the conversation about ESG largely isn't around that financial piece. So that's why I think it's particularly important to kind of pull it out in this context. So Liam, maybe it's one for you. What has the kind of material benefit kind of been on Capsule clients?
Yeah, so I guess Wild is a kind of absolute perfect example for us, really. I would kind of say this if Arthur wasn't on the call as well, but we've supported Wild since 2021. We kind of knew that they were kind of doing lots of amazing work through kind of their sustainable, environmentally friendly products. And I guess for us, it was about recognizing and getting them benefit for the work that they're already doing. So as Arthur said, there's that kind of accountability piece, but clearly kind of it's almost recognizing the work that they're already doing rather than creating more work for them to go along that path. And this year going into their renewal, so I mean they completed ESG, the Capsule ESG index ahead of renewal. We're actually, just purely due to timings, we'd already kind of gone and spoken to a few insurers that had actually declined to offer any terms for their insurance for this year. But using the ESG index, we're able to bring them back to the table. So we're actually able to kind of re-engage with insurers that had otherwise declined just based on a normal insurance submission that they'd see from any other insurance broker. And then further to that, actually kind of bring further competitive terms kind of in from other insurers again that wouldn't have otherwise offered renewal terms for Wild. And to give a true number, we actually managed to get a 35% reduction in the premiums that they were quoted for their renewal this year. So it's significant numbers that we're talking about, and purely only from kind of almost recognizing the work that they're already doing in a different way.
And from your the customers that Tom showed on one of the slides earlier, there's quite a big difference between some of them. So you've got Otter, which is a kind of software platform.
Yeah.
How are you saying this play out kind of within the companies of different sectors and stages?
Yeah, so I think it's a great question, and it's one that we recognize that there's different areas of the ESG that will apply to different businesses.
Yep.
So kind of the whole part of the Capsule ESG index is to really kind of be in depth enough to make sure that it's credible and make sure that it's kind of worthwhile and provides good information, but equally kind of it fits either a client that is just starting along that path, or kind of a big corporate, the likes of kind of on Fido of the world on that screen there, which kind of at the other end of the spectrum. And where you've got lots of our clients, say if they're technology businesses, will possibly score better in the governance space. You've got the likes of kind of Jubel or Heights, for example, that are more product related. So that actually they may go more to the E of ESG. So we can pull on different levers, and each business will be slightly different. But overall, it kind of gets represented as an ESG score per client.
That makes sense. And actually, that kind of brings me on to my next question for Dorian. So I come on to the materiality bit later, because I'm really interested in how you're integrating that into the questionnaire. But firstly, there are tons of ESG tools out there and frameworks and standards, and you guys at Capsule created your own. What was the reason for that?
I think it's simple. It's just down to the accessibility. Accessibility for the SME end of the market. I think it was James who was saying earlier that most people who are completing questionnaires are probably the CEO of a business that they're very, very busy. The concept of ESG to them is that not everyone is quite as advanced down the ESG path as Wild. Some people are starting that journey, and for most of them, they would probably think they've heard of COP26. They might have heard of COP27, but it was a long way away in a different country. So really, the question set was, there's quite issues around ESG are quite generic, but it was trying to find some way of placing what are 80 fairly simple questions in a way that people could feel, yes, they can answer them. It's making that, for us, going back to someone used the word holistic, it is about getting people on that path as well. For me personally, is I want as many people to join up and start thinking about ESG in their business. So again, it was you can look at a macro level, and you've got Fitch, and everyone. There are quite a lot of high level, very good and high quality indices out there, but it's you need to have that sort of engagement, and it needs to be appropriate for the SME business to be able to answer them. So that's why some of our questions may seem a little dumbed down.
Well, it's interesting from our perspective, because one of the main reasons we started VentureESg was because we felt like a lot of the existing ESG frameworks weren't really fit for purpose for early stage, high growth, largely tech companies, and that we needed to fill in the gaps with things that were more relevant. So things around building a responsible product. What does that mean from a bias in the AI, or going deep on data security and privacy, or things around team working environment that are relevant for teams that are growing from 5 to 50 in the space of a few weeks in some instances.
Yeah.
I guess from that perspective, have you taken a very kind of early high growth perspective on this?
Yeah,
and how do you plan to kind of in the future align to some of those fit for purpose frameworks? Like, will you use one as a proxy? Will you take, if a startup is being asked to fill in a form by a VC already, will you use that to fill in your, how, there's a lot of consolidation that we think could be coming down the line, and we talk about effort and wanting to make things simple. So, are there any plans for that going forward?
Yeah.
Well, ultimately, it is, a fairly, it's an online, simple, it's 80 questions, split, between the, environmental's got, 25, there's 30 in social, and then 25 in governance. And the aim is, at this stage is very much to try and just kind of, capture people's interest and get them on that journey and get a reasonable view as to where a business is situated as an SME. 95% of the questions are, yes or no. I personally, I would love to probably been about, 300 questions to get a much more in-depth understanding of where people are. But again, the real world, sales team and everything just kind of rein me back in. So we're just trying to, target questions which give us a feel as to where those businesses are. As time goes on, it's incremental. And you were looking to see how businesses have performed year on year. And ultimately, it may become, it may get absorbed into other tools, or there may be other systems out there, or, insurers, such as Beazley may be coming down more into what I consider our space.
Yeah.
But at present, it is, a lot of insurance focus is very much at the macro level, where businesses are trying to sort out their own, insurers are trying to deal with their own corporate standing from an ESG point of view. And that doesn't tend to just translate down to the level. I can see Tom's trying to cut me off here, so I'm starting to witter too much.
Thanks, Dorian. No, I was going to say, Hannah, it's that classic challenge that we have is making sure that something is kind of completable, and to Dorian's perspective, kind of point, not too scary for startups. When we're talking to them about their insurance, to kind of Arthur's point, it's not a natural fit, that kind of insurance straight into ESG. And so if a business comes to us with a real ESG lens, then it's an easy thing for us to start engaging with around, look, if we can kind of, if you're doing things in this world, in this area that we can present to insurers, then that could benefit you. Great. But when the flip side is startups, venture-backed startups that are growing, you're say kind of going from 5 to 50 overnight, and they're just looking to get their insurance sorted, then there's a balance of making sure that they feel like this is something that they can kind of feasibly complete. But it's also something that this growing list of insurers feel like that they can kind of consume in the right way and assess. And so the challenge for us is kind of that, making sure it's not overly simple so that it's not credible, but equally that it feels accessible to the startup community. And I think your point on consolidation is super interesting. And part of our engagement with VentureESg really is also to learn from you and the community around which tools are being adopted, which tools are being used by VCs to assess startups and portcos. Because where we have got to with those insurers is a commitment to recognize and reward these businesses, either based on B Corp status or based on going through the ESG index. And so it's feasible. And I know we spoke about in a previous life an insurance product we had that was based on our own assessment, but we did build out a panel of third-party approved assessors that were then also we could then insure against their assessment. And so that is absolutely somewhere that I think we could get, but we're almost waiting for some of that kind of consolidation or a guide from the market to say, this is the tool we're adopting. And if you were able to get that approved by the insurer market, then that would be helpful. And that can reduce the kind of onus on startups. And then just my last point is also just a point I made to you recently, which is this also being translatable through to venture firms themselves.
You totally anticipated my question.
Sorry.
Yeah, no. I was going to say you alluded to that on our prep call, and that's really incredibly relevant for this audience. So what are you thinking on the kind of the VC product side, and what does that mean? And also going back to that boring questionnaire question. We're being handed questionnaire ESG DDQs by our LPs all the time. I guess the whole question, like, how are you thinking about it?
So I guess the point on the DDQs is, at the moment, insurers are not seeing that information. And so they're certainly not looking at a VC firm or kind of a fund in that way. But so Capsule recently hired kind of head of VC and fintech from Lockton, who are a big player in the kind of VC insurance space, actually insuring you as a VC rather than the portcos and startups. And we're looking at kind of translating this through to the way in which we measure the risk of a VC in exactly the same way and being able to reward in exactly the same way, because we are conscious of that LP pressure and the fact that VCs are then kind of engaging with portcos on this exact topic. And so actually, if a VC can say, we've been through this process, we've benefited as a result of it, and clearly it's important that our supply chain, kind of the kind of wrong term, but kind of you get my drift, are also seen to kind of, or able to benefit in the same way. So that's something that we're focused on. And to your point on kind of DDQs and different ways of being measured, the more we can make that a two-way conversation to say, this is how we're already being measured, this is kind of the reports we've already been provided around what we're doing, to what extent can we benefit from that renewal, then I think there's a really, really interesting kind of conversation and kind of combined learning to be done there.
Yeah, absolutely. And we had this conversation, which we'll hopefully pick up, potentially putting a survey to VentureESg members to get more clarity on that question.
Yeah.
Just to build on that though, Thomas, I mean, from a Beazley perspective as a carrier, I completely agree with everything you said. There's a mismatch of standards out there. Some of this data collection is very, very, very difficult and complex. But it's well worth making a start, and it's well worth including that information to your insurer, because I can promise you we do care at the moment, and it will be material in terms of how we consider that risk, but it's only going to increase in importance. So year over year, you're going to be asked for this to an increasing extent. And I think year over year, back to Hannah and Thomas, your point about correlation of a well-run business to these metrics, it will start to be baked into some of the products from that perspective. And that's not a new concept for the insurance industry. There's other things that we track where there's correlations to riskiness, which may not be obvious, but we track those things. And to your point, they often fall through a well-run business, cares about things way beyond the standard domains. So yeah, I'm just encouraging, I suppose, it's valuable to collect, it's valuable to build year over year, they're valuable things to consider, and the insurance market is starting to care more and more year over year.
Yeah.
We've got some questions, so I'm going to ask them from Laura. A question for Arthur: what are the top ESG metrics you're using to measure success?
Hi, Laura. Thanks for the question. I think so. We track a variety of metrics across ESG. Some of them part of B Corp and other kind of traditional metrics, scope emissions, etc. I think although B Corp does a really good job of condensing hundreds of questions into a single score, it's still not that transparent where that score comes from. So what we attempted to do and use to kind of define our success internally is created our own metric, which I mentioned earlier, which is around kilograms of plastic prevented, which is something that every team at Wild feeds into and can easily measure their success against. So that ranges all the way through from operations team, where the kind of obvious product improvements feed into that metric, all the way through to kind of customer service and marketing. And the way we define that is every sale we make prevents someone from using a single-use plastic alternative so really we carved out our own to determine internal success and an internal KPI.
And maybe just an associated question, that's one that Justin has just asked. How are you verifying the data and documents to back up the answers given within Capsule?
I think so. We do a lot of work with our suppliers, specifically on the product. We hold ourselves very accountable to sustainability metrics, again, through third-party kind of verification processes like B Corp, but also it's the essence everything that we're trying to achieve, and without that authenticity, the purpose falls down. So we spend a lot of time internally verifying everything that we do, specifically in the supply chain, but also with other providers, to make sure that the metrics that we're tracking and attributing to ourselves are accurate.
But do you validate those with any actual like documents or anything that's kind of certified in that sense?
So with emissions specifically, that's verified using we actually use some agencies to help us track scope 1 to 3 emissions, but as part of the capsule process, we just answered the questions. I don't think we had to give any backup documentation.
Yeah, that's correct.
And I think on that point, Anna, I mean, clearly from an insurance perspective, we kind of operate on good faith in most things anyway. So in terms of kind of anything that a client discloses to us, we kind of have to go with that is what they are doing. The ESG tool, I think, was deliberately created as a kind of a yes or no. So kind of you either kind of, the questions almost are you are doing it or you're not doing it in whatever the question is. But we understand that there is a spectrum to a lot of that. And I think really if we really did get down to the kind of finer details of a lot of those answers, and I know kind of we kind of talk to a lot of our clients once they've gone through the index, we can bring those out with insurer submissions as well.
Okay. Have you ever had the instance where someone's questions actually haven't been too true, or someone has, like, I guess you wouldn't know, but have you, I mean, I imagine that's something that you could feasibly encounter, right?
Yeah, we perhaps had one that may be aspirational, let's say, but that and I actually, there was kind of, it was fairly obvious in their answers that they were being aspirational, but kind of nothing untoward in terms of kind of trying to pull wool over our eyes or anything like that. It was more kind of that they were answering it in their renewal that was coming up in a few months' time, where they felt like they could be there in a few months' time.
Yeah, but I think Liam's point is right, Hannah, in terms of that really is our role as an intermediary in everything we do, is bridging kind of the engagement with a customer around what they're doing around risk, their growth forecast. I mean, the numbers that a startup puts in a pitch deck in terms of their kind of growth opportunity to a VC is very different to the numbers that end up in a proposal form for an insurer, because that's the difference between kind of ambition and reality, and it's our job to kind of translate that through. And so the same is true in this as well. And in Liam's case, I know exactly who he's talking about. That again is our role to kind of, can we really kind of credibly take this to the insurer market? Possibly not. And then it allows us to kind of have that debate and discussion with the startup. But to Dorian's point, at least we're then having that debate and discussion around ESG, and there's kind of one more business on the pathway and kind of engaged in the discussion.
I think, James, you might, maybe it's to build on this, but I think you said you're going to answer it. Like, how often do you assess your clients on their ESG performance? And is the minimum score fixed year over year, or is it a growing target?
Yeah, so for most insurers now on things like this, including cyber, actually, it's a monthly cross-check. So we'll be, for SME, it's more challenging, right? Because it's not going to be an automated piece of data. But I suspect we'll move closer to that. A good example is on our cyber book. We perform vulnerability scans on a monthly basis. We often do that at time of quote and bind, but we're starting to see now the insurers have the infrastructure and technology to be able to do these things more iteratively. So I suspect we'll move towards that direction.
And another question from Laura to the Capsule team. Do you leave some time to your customers to improve their score before submission, like B Corp do?
No, is the answer. I mean, they are, it is normally the proposal is going forward to the insurer, you know, at a specific time. So all the documents and the, you know, we prepare a little report, a resume on the results. I think, as you know, Liam has said, you know, if something does look a little bit, you know, awry or maybe off, then we would touch base back with the client. But it is not. It is, you know, as at, you know, like a balance sheet, is at that point of time, and not as, you know, as perhaps as drawn out as the B Corp process.
Okay.
But where there is that opportunity, Hannah, is that an initial, I mean, first of all, anybody can access it and kind of see the questions they're likely to be asked months down the line. But equally, those that are then measured at renewal, that's really kind of a real opportunity to get a kind of positive narrative to insurers around the improvements that have been made in that time. So we do see this as a kind of a real kind of long-term opportunity to measure and engage with insurers and kind of get them to look at this specific kind of particular startup through a different lens.
Okay. I guess my last question is, I mean, there are lots of platforms out there now that are working with startups to help them, you know, monitor their ESG performance, kind of not necessarily on a live basis, but frequently. Do you have any plans to kind of integrate with any of those in order to get better access to data on a more consistent basis? Yeah,
I think our challenge is exactly as you say, is working out the ones that are ultimately going to prove out to be market leaders. I mean, as our role, kind of our day-to-day kind of role as a broker, we're targeting venture-backed technology startups that are kind of receiving meaningful funding. And as part of that, exactly as you say, we're seeing lots that are measuring emissions, that are measuring ESG more broadly, that kind of sustainability focused. And our challenge is, and again, this is partly where the survey may help, is really landing on which of those pieces, kind of tools and technology are being used by portcos, by VCs to measure. And then that's where there's a real opportunity, I think, for integration. And also for kind of bringing the insurer market into those conversations and hopefully getting to a point where some of those ultimately could be seen as kind of insurance-backed tools and technology, so long as you can get to a certain point, which is eminently achievable.
Yeah, we've been looking at those tools, and yeah, like you say, Hannah, there's a lot of different partners out there trying to provide services in this space. It's quite confusing, but maybe on the capsule side, something we can talk about, you know, lining on in the future. I think that would be quite powerful.
Yeah.
There's the last question, which I think goes back to maybe one of my first ones to Dorian around kind of materiality. Do you have a weighting between the ES and G, and how much of your focus is on scope 3 and supply chains?
We have each question has a weighting. So there are 80 questions in there in total, and each one does, you know, based on our view of the importance of that, you know, from a combination of an ESG and insurance risk point of view. So it's, you know, more split down, you know, in greater depth on, you know, the question by question basis. And our questions around, you know, scope 3 is just, you know, do you measure it? At this stage for, you know, an SME, probably not as far advanced as someone as wild, is, you know, do they actually recognize what it means and deal with it? And with regarding to, you know, supply chains, there are various questions around, you know, do they assess their clients, their suppliers? But again, it's very much at this stage, you know, yes or no. It is trying to, you know, get SMEs on the path of ESG and understanding that it's, you know, damn good for business anyway from a governance point of view, and then shown there is a relation that, you know, we do have a demonstrable track record in showing benefits around their cover. As time moves on and people become more accepting that, you know, ESG is, you know, a standard part of an operating model, then those questions, the plan is that, you know, they can be expanded out to become a little bit more demanding. But again, you know, going back to the initial bit, you know, it is invariably the CEO who ends up having to fill these questions in at the current stage of the business life. So it needs to be accessible and approachable to them.
Understood. I think we're at time. So before we wrap up, I have an apology to the audience. We care. The big irony of this is that we are talking about ESG, and we have a panel with 5 men and myself. So we're going to try harder in the future. Apparently this is somewhat reflective of the insurance industry, but perhaps not to this extent. So that has been well noted by us. But thank you to the 5 men on the panel being here and for talking this through. Tom, if if people in the audience, or like people listening to us when we put it on the Notion, if they want to reach out to you guys, how can they get in touch? Right.
I mean, hello@capsulecover.com will come through to the right place, or equally connect with Liam, Dorian, or I on LinkedIn. My email address is thomas.wynne@capsulecover.com.
Perfect. Thank you so much, guys, and we'll
Awesome.
look forward to seeing you again soon. Thanks, everyone.
Thanks for having us, Hannah. Thank you. Bye now.